It is Sunday, the 7th of July. I figured it was time to give a quick little update on performance. So, I'm looking at the QQQ chart, and for me, this is basically my market. That has the best companies, the fastest growing companies, the biggest companies, non financial. And last time we talked, we were probably maybe about right here. Um, the market was indecisive at that point in time. We weren't quite sure what would happen. I focus a lot on this green line, which is the 20-day exponential moving average, to see how this is going. And I figured that the price would kind of stick there. It would either come back to join it, or it would go up and this line would kind of join it. Since then, as we've seen, the market has kind of taken off again. The expectation is that rates will be reduced. So interest rates will be reduced. And if interest rates are reduced, then it makes it cheaper for companies to function, which also increases their earnings if they're making better use of their finances with the interest and so on. So this week, with the labor rates, this week with unemployment going up a little bit, which isn't necessarily a good thing for the regular person, that is somewhat of a preliminary signal that interest rates should be going down in the future, because that is one of the telltale signs that the Fed is using. So if interest rates go down, then prices typically, in terms of the market, will go up. And next week will be big, because next week will be earnings. The banks are coming out, and they will be able to tell us about what's happening with the consumer. So this is kind of where we're at with QQQ. So how did that affect the performance of my portfolio? So let's go over to my E-Trade account. This is what I have right now. I have a 33% allocation to TQQQ. All right, so this is a 3 times QQQ. So 33 times 3 is just under 100. I have a similar to the S&P, a 3 times leverage S&P UPRO. I only have a little bit of that. I would like to get that up to 5% roughly. I have a bit of Bitcoin, and recently, I may have done this since the last discussion, but I locked in a long-term 1-year CD with Goldman Sachs for 5.4%, just because the expectation is that interest rates will fall. So I locked in that for 1 year. And the remaining of the funds I left in MVRXX, which is basically a 5.2%. So if interest rates go down in the future, this is going to drop as well. All right, you could have done this with VMRXX, anything else. So that's what my portfolio looks like right now. So in terms of performance, you'll see that I'll click here. Year to date, I'm doing quite well. The whole goal is to basically track this NASDAQ 100 while maintaining a lower allocation of my money and keeping a higher allocation in cash. And 20.94% versus a 19% is good, especially since the market just keeps going up. There's a little price I have to pay for that triple leverage fund, but it's doing exactly what I want it to do. And should it reverse, because I'm basically holding this probably is a better view. I'm basically holding 61% of my account in cash. So should the market reverse and go down, I should still be in a fairly good position. Okay. So just a quick update to show what's going on with the portfolio, where I'm at. We will see what happens when earnings comes out next Friday. And that's all I have for now. So have a great weekend and have a great week next week.